Hey traders, Nick here looking at Peloton. Haven't done a video in a few days. I've been busy with the membership. We are live right now watching these screens. I have, not these screens, well, similar to these. I have 211 people just now. That's a record. Okay, so one of those people actually brought me some data on Peloton. So I'm watching the market, and then Peloton did this today on a headline that they're halting production. So the assumption is, oh my God, the sales demand is crashing. They're halting production because they can't keep up. And now this level is pandemic level. So what happened is they basically pulled forward a lot of their sales due to artificial environments. So we all got locked down. Nobody could go to the gym. So their sales exploded. In fact, they pretty much, let me see here, 2020. So 915 million 2019 before the virus, pretty much doubled during pandemic, doubled again last year. That's outstanding. The running 12 months, tells a good story. So that's last year basically. But if you drill down, you can see some slowing, which is fine, but there's still a lot. So luckily, I have a member who shared information. So they're halting production to burn off, verify that information. I didn't verify it yet. They're to burn off a lot of inventory, like $1.2 billion worth of inventory. That's good news. They also said they are cutting expenses by a lot. That's also good news. So what happened is their demand exploded. So they had to panic to fill the demand. So part of it is you get through growing pains. You explode, you do things inefficiently, and it bites you in the ass when things go back to normal. So they pulled forward sales is what happened. And I'm going to go to a weekly chart to show you. So this was Peloton IPO 19. Then crashed into the pandemic. And then people figured out, oh, that's a good thing for them. Whee! Clearly overdone. And now they gave it all up. All of it gone. So if it's a normal company now, before the pandemic, this is a buying opportunity in my opinion. Now you have to be surgical with it because we also have falling markets. So this doesn't trade in a vacuum. It trades inside of the market. So if the markets continue to fall, you're going to find it hard to find buyers for this, quote, piece of crap today. The headline is bad. It's inflammatory, in my opinion, because I think 500 million on average for the last 10 quarters. 500 million came from the connectable machines, I think, and 300 million from services. But they have 1.2 billion, so it's not like they're not going to have sales. They have plenty to supply the sales at whatever slowing pace it is, but it's still an aggressive pace compared to 2 years ago. So it's not super bad news. It's good news coming out of a bad situation. So it's like a flush. It's if I panicked out of the stock today, then I made a mistake. If I go all in the stock today, I'm making a mistake. If I double down on the stock today, I'm making a mistake. If I want to take a flyer on it from here with small size bet, partial position, I'm not making a mistake. I'm taking a viable bet on a fast growing business that went through an incredible growth spurt and it's adjusting. I think the management was overwhelmed and they made mistakes and now they're fixing their own mistakes. So we'll see how it goes forward. I'm not a super fan of Peloton. I don't own one. I don't know many people that do here, but anyway, it is a completely objective opinion over this company. So I went to the fundamentals to get some information on it to see how expensive is it. So there's no PE clearly because they lose money, but it's 2 times sales. So it's from that perspective, it's not that expensive. 2 times sales, that's pretty cheap actually for a growth company. Growth companies should have a high multiple on sales. And this is trailing 12 months sales, not forward. At least that's what it was, unless they changed the way they measure it. I should look into that. I'm pretty sure it's trailing actual. So it's not like forward sales. So it's a realistic number is what I'm trying to say. The concern is the level of loss. And that's what they're addressing. They're going to cut people, close stores, stop making stuff, burn off your inventory. That fixes this problem. So let's give them credit. Give them a couple quarters. So a starting position here is not that crazy, but the market is. The market is crazy today, but you have to be in the room to find out why I'm all pissed off about the S&P. Okay, I'll give you a peek. 8:05 my time in California. This stick right here and this stick right there. I said, expect a red close today, if not even minus 1.5%, because the bulls were pennies from a super breakout. It was already up 1.5% or so, and the fear, the VXX, the fear capitulated and made a new low, broke down. The reaction in the SPY was to break down as well. Well, on a 5-minute basis, 2 red ticks doesn't matter much, but it told me right then and there the bulls wanted to throw the game, fill the gap, and they just did. And now we're lower than the flash low 2 days ago. That is insanely frustrating for somebody that watches ticks like that. So from 8:05 this morning, these 2 ticks, there were no signs of weakness. I told my group, 200 people, I said, be aware, we might throw this game and we're going to end up having a bad jag for the rest of the day. Hopefully, they'll fill the gap and they'll recover. But we had a plus 1.5%. The NASDAQ was up. Last I checked was 1.8% up. Now it's flat. All right, so that's it, folks. Good luck.